Okay, welcome to my channel. Now in this video I'm going to be discussing the QuickBooks Online, and I'm going to be sharing everything you need to know about QuickBooks Online. So this is a cloud-based version of QuickBooks, and basically designed for businesses that want to monitor transactions from anywhere. You don't want to restrict your transaction entry to a particular computer system. So this particular version is what you need to record your transactions, and you can actually download the mobile app and keep track of your business. So the first thing we need to discuss when it comes to QuickBooks Online is how to do your basic setup. I've already created a demo company, and this demo company is called ABC Marine Service. So as you can see, it's going to be an engineering service company with different clients. Most of our clients are oil and gas firms. So that's the tip. That's an hypothetical company that we have created. Now when you set up your QuickBooks like this, the first thing you need to do is to add your multiple currency. That's the first thing you need to do, is to set up your multiple currency. To set up multiple currency in QuickBooks, you go to this J icon here. You then select account and settings. So under account and settings, you drill down to advanced. So we are waiting for that to load. Okay, fine. So this is account and settings. You come to advanced. Under advanced, you then locate currency. Sorry, I'm trying to locate currency. Fine. Okay, fine. So this is it. We've already activated multiple currency before, so that's why. So if yours is switched off, we are expected to switch on multiple currency at this point, and then your home currency is already by default. When you set up your QuickBooks Online, it detects your region by IP address. So my IP address shows that I'm in Nigeria, so naturally it's going to pick my Nigerian naira at my base currency. So that's why I have it like that. Then you can activate multiple currency. Now for each of these features that you have under the settings, we have the first one, which is accounting. This is where you set your first day of your the first month of a financial year. It could be any month, it could be January, it could be February, it could be March, and all that. So this depends on your financial year. Then you have the first month of your tax year. If it's the same as a financial year, fine. What's your accounting method? We use the accrual basis, close the books, default tax rate selections, and tax forms, chart of accounts. Now on a chart of account, you can actually enable account number. Enabling account number lets you assign different numbers to your account head. You can say your income is 1,000, your expenses are 2,000, your liabilities are 3,000, and then your asset are it depends on how you want to assign numbers to your account head. Then we have the categories, which is the class and location. For instance, in your business you might have different location or different departments. So class basically help you to categorize your transaction by either segment or departments, and then location here can also help you track your transactions by location. So we can decide to activate class on the system, and we can also ask the system to prompt us whenever we enter transaction without a class. So we have them here. Then you can as well check your locations too. Check your locations will help you select the region or the area where the transaction is entered from. So for instance, you could have different clients at different branches in different locations, and everybody is connected to QuickBooks Online. So that will help each and every person to enter a transaction from their various location. So that is what we call class and location in QuickBooks. So these are other things you can do. You can check them out, but like I said, these are the basic setup you need to do before you move on to the next stage. Now the next stage is for us to add our customer. That's the first thing you need to do. When you add your customer in QuickBooks Online, you need to state the currency that customer paid you with. So it's very important. If the customer pay you in your local currency, you need to state that. If the customer pay you in a foreign currency, you need to state that. So to add our customer, you go to sales. Under sales, you select customer. When you select your customer, it will show you all the customers that you have on the system. That's the customers you have already set up in QuickBooks Online. So already we have some customers that we've already added. Now for the purpose of this training, I'm going to show you how to add a customer to QuickBooks. To add a customer, you go to new customer, you click on new customer. So this is where you add your customer. Now your customer might be the name of the person or the company name. So let me use the name of a person, a company name, Service Solution Oil and Gas. So this is a customer, or this is a client. Now you can then go to payment and billing. Payment and billing is where you enter the account balance. Now when you set up your customer, there are 3 vital information you need to enter. 4 vital information you need to enter. First is the name of the customer, second is the opening balance, third is the currency, and fourth is the opening balance date. So assuming today 20th of March is our opening balance date, so we want to check our balance as at the end of today. So this customer pay us in naira. You select naira. The question is, what is the customer balance here? Assuming that before now you issued an invoice of 50 million and the customer paid you 45 with a balance of 5 million, your opening balance here is going to be 5 million naira, not 50 and not 45. So opening balance here is the account receivable balance, the money you are yet to receive from that customer. So that is what you key in here as the account receivable balance. So we have the customer name, we have the opening balance, we have the date, and we have the currency they pay us with. Now other information are optional. You can actually set your payment method. If they pay by check, you select it. Now if you also have a terms of payment are periods within which customers are expected to pay back, and any invoice that exceeds that period becomes an overdue invoice. So you can set a terms of 30 days. If you have a central term that applies to all customers, you will set your terms here, and then you click save and close. So you can fill other options like the address, the mobile phone number, the website, email address, and any other information you want to track, as long as that customer is concerned. So this is Service Solutions Oil and Gas. We've been able to set it up as a customer in QuickBooks. Now that's the first option. The second option is assuming that you have another customer that with a credit. That's the second scenario. The first scenario is that the customer is owing us. The second scenario is, what if the customer paid in advance, but we are yet to render that service, or we're yet to sell to that customer or client? How do you track that advance payment? The way you treat it is definitely going to be different from the first option. So you can say, if we have Clearing Oil and Gas Limited, now this customer paid us 10 million naira, but we are yet to sell to them, we're yet to render a service, or that project is yet to be executed. So as far as accounting is concerned, that money, it's not supposed to be treated as an income. So you're supposed to treat that as a credit in the name of that customer. So let's take it as 10 million. Now this is how you're going to treat that. The customer pay you in local currency. If you save this like this, it takes this 10 million as an account receivable balance, but in the end it's not an account receivable balance, it's an account pay, it's a credit, it's an advance payment. So the difference here will be the minus that you're going to add here. So you're expected to add a minus. That minus shows that this particular client made an advance payment, and this amount sitting in our account is a credit in the name of that customer. Now the essence of this is that whenever I want to create an invoice, system already has a credit to apply on that invoice. Then I can also set my times to be 30 days. Then I'll click save and close. So here we have treated 2 customers in local currency. Another question is, what if we have a foreign customer? Now the difference between a local customer and a foreign customer is the currency that you select. So ensure you always select the currency that the customer pays you. That's what differentiates them from the local customer. So if I have a foreign customer that I want to set up on the system, MG Tech Oil Firms. Now MG Tech Oil Firm is a foreign customer. So what I will do is that I'll go to payments and billings. I'm not going to select Naira again. I'm going to select the foreign currency. So I'll select USD, and then I can set my terms here. So this is how to set up a foreign customer. Now the question is, what if the customer has a balance? How do you set that up? First, save this particular you're expected to save this transaction, and then you create an invoice as at 19th of March. Our opening balance is 20th of March. So if it's a foreign invoice, if it's a foreign customer, you're supposed to create an invoice as at 19th of March, and that invoice will contain the balance, an invoice of the balance that this person is owing. So assuming he's owing us 120,000 US dollar, so what we are going to do is you click save and close to save the name, and then you go to your invoice to create an invoice of that $120,000 as at 19th of March. So our opening balance is 20th. So when ending balance as at 20th is going to be that $120. So this is also very important. Now we're going to create an invoice and then issue that invoice to Martech Oil and Gas, and that invoice is going to read 19th of March. So 19th of March, so that it will be an opening balance for 20th. Or we can also use 20th of March, since all our balance are as at the end of 20th. So this also applies to, so I've not added product and services, so let me quickly add this and call it engineering services. So we're going to add engineering services, and fine. If it's vatable, our VAT is 5%. I'm also going to show you how to set up your VAT. We are still discussing the basic setup in QuickBooks. So whatever this person is supposed to pay us out of scope of tax, so we're gonna, so 120,000 US dollars. So this is equivalent in Naira. Then I'll click save and close. The email address mgtech at gmail.com. So it's prompting me to set the class, that's select the class like we did before, but there's no need for class here for now. We are still doing our opening balance setup, so we don't really need this for now. So you can see we have an open invoice of 120,000 USD in the name of Martech Oil Firm. So now this is how to set up your customers. As a recap, you go to new customer, under sales, you go to new customer, you enter the name of the customer, the opening balance, the currency the customer pays you with, and then you select the date. So this is very important. So if you have a question on this, you feel free to share your comment, and I'm going to respond to your comment and then and answer your question and all that. So the next stage we are moving to now is how to add our vendor. Our vendor is also quite straightforward, the same user interface like we have on the customer, it's also applicable here. So all you need to do is you go to your expenses. Your vendors here or your suppliers are your service providers, the people that you sell to, people that sell to you, either product or service. So that's your service provider. So we have our supplier. It could also be your product suppliers too. So to add your supplier, straightforward, you go to new supplier. Now your supplier can also be a foreign supplier or local supplier. So I can as well add a local supplier here and then call it Dangote Limited. So this a supplier, we pay them in naira, which is here. You enter your opening balance and then they have a term. Now the term here, it's different from the one on the customer. The one on customer, it's the one you set. You are expected to tell your customer when to meet up on invoice sent to them. Now what you see under terms for supplier, it's what they are expecting you. It's the period of day that's been given to you to meet up to the bill that you receive from them. So ensure that you set your terms. But if your term, if a supplier doesn't have term, you can as well leave it. So terms of payment are like period within which you are expected to pay your supplier. That's if you're talking about supplier center. But for customers, is the period within which customers are supposed to pay you. So that is for customer. Now we have set up our supplier, and you can also add more suppliers on the system depending. You can add your product suppliers, you can also add your service provider. So that's quite straightforward for supplier. Now another important part of this video is our bank accounts. Every inflow that comes from a customer goes to the bank. Every payment that leaves that account also comes from the bank. So bank is central to every line of business. So I'm also going to show you how to add your bank account in QuickBooks. To add your bank accounts, go to chart of accounts. Now beyond just adding your bank on chart of account, chart of account is an account that helps you categorize all your transactions to either income, expenses, assets, or liabilities. That means whatever transactions I'm entering here can either be an income transaction, an expense transaction, an asset transaction, or liability transaction. And what the system uses to recognize an account name is the account type. For instance, if I'm going to add a bank to this system, let's assume that I'm going to add a bank called GT Bank, one of the top banks in Nigeria. Now system is not going to recognize that account name as a bank because the name is GT Bank. No. So if I set up GT Bank here, system won't recognize this as a bank because the name is GT Bank. What it uses to recognize that an account is a banking transaction, or sorry, to track all transaction that passes through an account name is the account type. So what makes this name to be treated as a bank transaction is because we selected cash and cash equivalent and bank. So ensure that anytime you're adding a new account name in your chart of accounts, what you are actually selecting is the right account type. So you need to also take note of that. Now this is my bank. I can also enter the currency. So first let's set up our local currency account. So we have our local currency account set up, and then I'll click save. Now if I don't want to close this and start all over again, I can as well select save and new. Save and new will save this transaction, will save this setup, and then reopen the window again, so I don't have to go back to chart of accounts. So if I want to add a foreign currency to this particular account, so the chart of accounts, I can the same account type. I've already explained why account type is very important. Then I can also select the same bank and indicate USD. So this is a USD account. System won't recognize this account as a USD because of the USD stated there, but the currency I select. So all I need to do is come to currency and select USD as my base currency. So this account will then be treated as a foreign account. So I have 50,000 US dollar in that account. Now also the exchange rate here, if your home currency is in US dollar, euro, or pounds, you are not expected to update any exchange rate here, because system automatically picks it online. So but if your home currency is different from these three, you have the discretion of updating your exchange rate. Now why? Because in these three regions, US, euro and pounds, exchange rate seems to be a little bit stable, so it's not kind of complex. So you have the option of getting the rate close to what it is. But for other currencies, other country where you have multiple markets, like here in Nigeria, we have the official rate, we have the parallel market, we have the bank rate, we have the, so you have everybody quoting their individual rates too. So those are the things that you need to note so when setting up multiple currencies. So here in Nigeria, we can actually set our own base currency, my exchange rate, I mean. So I can set it at 365. That's the black markets. So I can then click save and new. So if I want to add another bank account again, all I need to do is select cash and cash equivalents. Then we have FCMB. So that's another bank in Nigeria, FCMB Euro. So assuming this is Euro account, so I'm also going to update my balance to, and then add my Euro balance here. So then I can then click save and new. Now beyond adding your bank account, because chart of account is not only about banking, you can also add other account heads too. So for instance, I can decide to add more income heads, more expenses and all that. So if I want to add more income head, I need to ensure that my account type is income. So if I render a service, let's say oil and gas support service. Now oil and gas support service is one of the services I render. Now system isn't going to treat this or going to recapture this name as an income head except I select income. So account type help you categorize your account name to their appropriate section, appropriate reports. So and also get your report to be well presented, because if I select bank here, if I select bank or cash and cash equivalent for oil and gas support service, is going to treat every transaction that passes through this account name as a banking transaction, which will not be correct. So you need to ensure that the right account name is selected for every account, right account type is selected for every account name. Now I can as well add my expenses too. So you have option of selecting the expenses under account type. So if you have different expenses you want to add, you can as well add them. Now chart of account already has a skeletal structure or a pre-built format of account head, account type. So all you need to do is go through these account types and then select the one that fits your business, select the one that matches what you do. And also you can edit an account name. For instance, if I have bank charges and I want to edit it, I can also edit it. All I need to do is click this black arrow and then select edit. Through this I can edit various account type, various account name. Maybe I want the name to probably describe the type of service I provide. For instance, payroll expenses, I want to change it to salary. I can as well come to edit and then change the name to salary expenses. So these are instances. Then I'll click save and close. So my account name should change from that payroll expenses to salary expenses. And if I want to search an account, I can also search an account too in QuickBooks. To search an account, all you need to do is come to the search box here and then you select the account you're looking for. So QuickBooks automatically suggests that account for you. All right, I think that's that for the chart of account. Now the next part of our setup basically is how to set up our tax, how to set up your VAT. Now by law, every business is expected to charge VAT or sales tax. In the US you call it sales tax, in the UK it's called VAT. So every business is supposed to charge VAT or sales tax on services provided or goods supplied. So, and as the business owner too, you're also expected to track those VAT charges to your customers. So we've already set up VAT too, but how do we add your VAT? When you go to your VAT section, you click add tax. Under add tax, you select. So we have the individual tax rate, we have the group tax rate, and we have the custom tax rate. Now the individual tax rate is where you add one, like you can add one after the other. For instance, if you want to add your VAT charges, that's one. If you want to add your petroleum tax, you can also have some consumption tax or other regulatory tax that is expected to be deducted or charged back to the customer. Now when you have multiple tax on an invoice, you use what we call the group tax. So the group tax lets you add multiple tax on an invoice. For instance, I can give the tax name, and then I can as well select. So it's assumed that you probably would have selected all the individual taxes or added all the individual taxes before that makes up that group. Then you can then come to group tax to add the group tax to your system. So that means you can actually assign or apply multiple tax on an invoice. So that is for tax. All right, so after setting up your tax, now it's time we move into transaction properly. We've discussed the customers, we've discussed the vendor, we've discussed the bank. Now okay, let's talk about how to add your services. To add your service, you click this icon here, then you select products and then services. Where is it? Yeah, fine, on this J icon, product and services. Now under product and services, you'll be able to add the list of the services that you render. Already we have one, engineering services. Then you can go to new, so you say oil and gas support services. So our oil and gas support services should go to an income account called oil and gas support services. We added this under chart of accounts, remember. Then you click save and close. Now if you want to edit this, already when we added this engineering service, we mapped it to a sales account, so you can actually edit it and then select the right account type. So we then come here, click add new. We want to add engineering services as an income, so we'll select revenue, engineering services, you click save. So you can, that's where you add we can add as more, you can add more income, I mean, to this particular section. So the rest you can make them inactive to hide them. You can also make this okay, let's just say oil and gas staff training. Oil and gas, I'm editing the ones that are there as a default, so it's going to come under support service, oil and gas support service. Save and close, and then you can also do the same thing too. So this is where you add, so you can add as many services. Here are your revenue channel, how you make money, what you sell. You can sell your product, and so you can also add your products to the system. So the reason I added services is because I'm actually focused on an oil and gas marine company, so that's why we're limiting it. But if you want to add your product, you go to new, and then instead of selecting your service, you select your inventory, and you're able to add the quantity on hand, the cost per unit, and all that. So let's go back to the dashboard. Alright, so now we've done the basic setup. Like I said before, we have our customer added, we have our vendors added, we have the services, we have the bank, we have added some expenses, and even though we have already built chart of account, I also explain how to edit and also how to add your account name, and then why you should select the right account type when you select an account name, because that's what the system uses to classify or categorize each of the transaction heads, that each of the transaction that passes through that account name. Now let's go into the sales properly. Now when you make a sale in QuickBooks, it can either be cash sale or credit sale. For every cash sale, you're supposed to use sales receipt. For every credit sale, you're supposed to use an invoice. Now when you do this, on the cash sale indicates that the client made an instant payment at the point of sale, while the credit sale means the client is supposed to pay at a later date. So let's make a sale. You can go to sales receipt. Your sales receipt will then pop up a window that will have you fill in the name of your client, the services you provided, the amount, if it's taxable, and all that. So first we're going to select the name of the clients. Mind you, some of these clients are set up in dollars, so you can actually make foreign sales too and all that. So let's start with foreign sales to Magtech Oil Firm. So this is a sale to Magtech of Oil Firm. We render the service to them, and it's oil and gas support service. Okay, let's assume that we train some of their staff. How many staff did you train? We trained 10 staff at the rate of $400 per staff. And if this expenses is taxable, under tax, I'm going to select 5% of that. Now, where did this training take place? If I want to classify this transaction, I can then add a new class. So if this training took place in Lagos, Nigeria, I can as well add Lagos, Nigeria. So I can add several classes to my account. If I want to add another class, I can then go to Abuja, Nigeria. So I'm adding different classes, different locations. So that's what we have here. Now deposit to is the bank, they are paying the money. So this is a dollar transaction, it has to be paid into a dollar account. So this is a summary of how to make a sale in dollars. If the client is a Naira client, you can also select the Naira transaction. Then I'll click save and close. So we have sales receipt in the system already, and if I want to verify, I can as well go to my reports. Now every transaction on the system is reported in your home currency, whether your sale was made in dollars, made in pounds, made in euro, whatever currency that sale is, it will be reported in your home currency. That's it, using the prevailing exchange rate. So here I'm trying to look at the reports that will help us to check the sale that we just entered. So you can see oil and gas support services, so that's equivalent of that in sales receipts that we raised earlier. So sales receipt is used for cash transaction, invoice is used for credit transaction. So to record our invoice, you go to new, you select your invoice. So invoice is for services that you have provided, but the client hasn't made an immediate payment. They didn't make a payment at that point, so you just need to record it that you've made a sale, and then hope that the client will pay you at a later date. So here I can also select ITA oil and gas. This is one of the clients in Naira, and then oil and gas support services, and then I can as well enter the value here. If this amount is taxable, 5%, where you can also select Abuja as a branch. So while one is in Lagos, the other one is at Abuja. Now the difference between your invoice and sales receipt is that if you look at your sales receipt, you have an option to select the bank where the money is going to, but on your invoice it's not there, so it assumes that it's a credit transaction. Now using an accounting workflow when you issue an invoice and the client didn't make a payment, you're expecting that client to make a payment at a later date. Now when the client eventually pays you, you're supposed to receive a payment against that client. So if the client pays you, it's either you come to all sales, this section, to show you all that the transactions you have entered, or you can also come to customers to show you list of all the customers that you have currently entered transactions in their name. Then you can receive payment. So assuming this enter want to pay us, you then click receive payment. If you don't want to go through that route, you can also go to this plus sign at the top here, the same thing. So you're receiving this payment from ETA, as this is a Naira payment. Naira payment can only go into a Naira account. So here it will show you all the invoices that you have issued to that particular client. Then I can then click save and new. It means I've received the money from that client and that money has been paid into the bank. So that's how to receive payment from a client. Okay, so having discussed the sales receipt and the invoice, let's move to the next stage, which is how to make payment. That's the expenses. Now, to make payment in QuickBooks, it's a straightforward process. Now, the first thing you need to ask yourself, just the way we've recorded credit sales and cash sale, you also need to know how to record credit expenses and cash expenses. Any expenses that you have incurred with no immediate payment at that point, or the point where the transaction occurred, you are supposed to record it in such a way that it will display as an outstanding bill. But a cash expenses should be able to clear that, should show that cash was actually paid at that point. Now at a later date, if you want to clear your outstanding bill, you can also show in use what we call pay bill to do that. So let's move on. Now under our expenses, you go to your expenses in QuickBooks. Then under the expenses, you check this new transaction here. We have the bill. So the bill is used to track all credit expenses you have enjoyed with no immediate payment. That's what we use enter bill for. Now here you select the supplier. Select the supplier. Let's assume that Dangote supplied us cement, and we then click item. So you have category, you have item details. So this is a product and services. We don't have any product yet, so we can add a new product to the system. So we want to use opportunity to demonstrate product. So you can then call it bags of cement. So maybe we want to use it for construction. Now at the beginning we have 100. Statement ending date is as at today. Fine, so you can click save and close. So we've added bags of cement. So how many bags of cement are we buying? We want additional 120 at the rate of 3,500. So where are we taking it to? Lagos branch. So you can see how we're also using class to track different transactions. Then I'll click OK. Now this is a bill that has been recorded. This bill means that Dangote has supplied us, but we are yet to pay them. That's what this bill means. So if I go to my expenses tool to show me, so whether that expense have been paid or not, the law based on the Accra concept expects you to treat or recognize that transaction as an expenses. So just like the way we have our income, whether the cash have been received or not, it has to be treated as a sales transaction. So if I want to pay my bill, I can then use make payment. Make payment would show me all the bills that are outstanding, but if I want to pay this particular one, I will select make payment and then the bank from which the money is coming from, and then I will review my transaction. Make sure you always review your transactions before you click save and close. It's very important because you might actually make a mistake, and then that would have a ripple effect on your bank balance. So you need to take that into consideration. It's very, very important. So also under the expense too, you can also make cash payments or cash expenses. Now that cash expenses, it implies that no cash was the expense was not made on credit, so it's by cash. So all we need to do is go to new, and then you select your check or expenses, whichever one you select. Now you will notice that the difference between our enter bill and cash payment or check is that there is no room to select your bank account. So you only select your bank account when you're making actual payments. So if I want to pay this client again, this Dangote, this the money is going to come from this account to show you our account balance, and then I can then select that particular client. So this is the client that I want to clear. These are an expenses. So I will select the client that I'm paying. So I'm paying Dangote, and then we then select the product that you bought from Dangote. So we have that saved here. So I'm going to stop here, and below this the description of this video, there is a link to check the remaining part of this video, where I'm going to discuss how to do your bank reconciliation, how to do your bank transfers, how to generate reports, and also do subscribe to my blog. Go to the bottom of this page, this video, the description section, you will see a link that points to the second part of this video.